Welcome. Thanks for joining me. This is my first webinar, period. But specifically, my first financial literacy webinar. We're going to shoot for an hour, but we might come in a little bit below that. But we'll see how that goes as we progress. A little bit about myself. My background is actually in television production, but this past what is it 3-4 years now I've been working at Bloomberg Television, and it's opened up my world in a sense. Bloomberg Television, for those who don't know, is financial news, right? Predominantly financial news network. And working there, it's opened up my experience to the language of money, to say the least, right? I didn't know about things like what's an asset class, right? What fell underneath asset classes and things of that nature. But it sparked my interest, and I decided to pursue a few courses that you can see on your screen there. I'm now certified FX trader. FX is, foreign exchange. And I'm also a pro trader. Pro trading is pretty much just a particular technique used in trading, all asset classes. Technical analysis is pretty much, there's two types of analysis when you're talking about trading. You have fundamental and you have technical analysis. Fundamental simply is when a trader uses a lot of balance sheet information, whatever income statements, whatever news says, right? You take that into consideration in trying to plot your trade. Whereas technical analysis is pretty much looking at the chart, right? And understanding that what you're seeing on the chart is pretty much buy orders and sell orders. That's what makes the chart move: people buying, people selling. So I was trained in understanding the chart itself. What are buy orders? What are sell orders? So we're not covering that today. Today we're going to be looking at what is financial literacy. I'm going to show you, a few tips on budgeting best practices, and what's the difference between saving and investing, right? Some might already know about, saving. Some people might know about investing, but there are two different animals, right, in trying to achieve your goal. So let's push forward. So I have a little definition here that I found. Let me take myself off the screen for a little bit. So financial literacy, right? So the definition I found was financial literacy is an education and understanding of various financial principles. It also involves the proficiency of financial principles and concepts, such as, and I have a few of them listed here. All right, financial planning, which is actually what we're going to be covering here. Compound interest, right, is a key element of understanding the language of money, right? I believe Einstein once said that there's compound interest is one of the greatest forces in the universe, right? All right, and it's simply just, how does money multiply itself? That's pretty much compounding interest, right? Then we have debt management, okay? We also have profitable savings techniques, and we have portfolio diversification, right? And a quick point on portfolio diversification. So a lot of times I've heard people at Bloomberg and other people in my circles have mentioned diversification, right, when it comes to investing. And some people might say, let me get a stock in tech stock, and let me get some some GE stock, General Electric. Let me get some stock over here in oil. Let me get some stock in tech. And then you think that this is diversification. That's not the case, right? Where diversification comes in is when you have invested in different asset classes, right? For example, there's Forex, right? that I'm proficient in, you have regular stock market, right? And the stocks include ETFs, right? You also have futures contracts, you have options, right? So those are pretty much some asset classes. So if you have an options contract here, right, in let's say some crude oil or some grain, right? And then you have over here some ETFs, which we'll talk about a little bit later, in real estate, let's say, right? And then you probably have some stashed away in some regular blue chip stocks. That would be a better idea of what diversification is. It's not just where you're putting your money in a sense of market space, be it real estate, be it tech. It's also the vehicle which you use to then invest through options, futures, stocks, right? So that's the general principle here. Let's push forward. And of course, like I mentioned before, real estate, should you buy or should you rent, right? These are some of the general principles that one needs to understand, and there are more, but these are just some of the key ones that I discovered that I feel like are integral in understanding the language of money. For today's quick presentation, we're just going to be looking at financial planning, right? And a few things fall underneath that. All right, so we're going to start off with the budgeting best practices, okay? So, and then I love definition. I think definitions are very important. So I have here, budgeting is a process used to track your income and or expenses in order to achieve control of your finances. Excuse me, get some water here. All right. So I have some budgeting tips here for you guys. So what I've discovered is that, you know, it makes no sense for someone to say, well, makes no sense for me, for someone to say, oh, I need to have a budget. I need to, you know, budget myself. I need to put a budget, da, da, da. But the first thing I feel like someone should try to understand is that you need a goal, right? The goal can be, okay, the big one would be retirement, right? You're trying to budget yourself so you can adequately save, then invest for your retirement. Or you can have a short-term budgeting plan, right? But you start with a goal of like vacation, right? So summer's coming up, people want to go different places and so on and so forth, right? You can have a goal of, you know, a new car, a house, you know. Your goals can be as big or small as you make them, but it's an integral to have a goal, right? So the next thing here we have fixed expenses, right? So now we're looking at categorizing your budget. So fixed expenses obviously are things, as I mentioned here, you can see mortgage, your rent, your student loan, your car notes, etc. So fixed expenses pretty much are anything that are recurring that you absolutely have to pay, right? That would be your fixed expenses. After that, we have your variable expenses, such as food, right? Because you might spend $100 today and 200 next week. So that varies, right? Transportation costs and stuff like that, all right? Now, for me, I feel like this is one of the things that's probably, I don't know, overlooked, and it's being disciplined, right? Cut back on spending in order to meet your short-term and long-term goals, right? Discipline is like, it's probably one of the hardest things, even for, you know, for me and my household, my wife and all that, you know, to be disciplined and making sure that, hey, we got to stick to this goal is like paramount to achieving it. All right. So next thing here I have is document all income, right? And after the next slide, we'll look at some helpful apps that help to document your day-to-day expenses, week to week, month to month, so on, right? So these are some of the key points that I feel are paramount, right? When thinking about your goals. Start with a goal. Thinking about your budget, excuse me. Start with a goal, right? List out your fixed expenses. List out your varying expenses, right? Variable, right? And be disciplined. Try to be disciplined and document everything, right? Let's push forward. So, I went online and I found a few helpful apps, one of which we actually use, which is pretty good. I won't disclose which one in particular because they're not paying me for that. But these are a few apps that help you to budget properly. So what they do is essentially you have Mint, you have Pocket Guard, you need a budget, which on the App Store you find it as YNAB, and you have Digit, right? And the cool thing about these apps is that they pretty much they're linked to your account. Let me open up my camera here. Yeah, so they pretty much are linked to your debit card, credit card, whatever cards you use, and as you go through whatever purchases that you make, it tallies them up, right? And you can choose to have them tallied for a week, right, on a weekly basis or a monthly basis, and then at the end of that week, then you can revisit the app. You see what your spending habits are, and then you can transpose that information into a spreadsheet, and then that gives you a better understanding of, okay, I spent this on that, this on that, and then that's when you really drill down and you say, okay, what do I want to cut, right? Do I need to cut anything in order to meet that financial goal, right? Which is why I feel like having a financial goal is so integral, because that's the starting point, All right, so these are some of the apps. There's more, of course, but I think that these are better rated, let's say. Okay. Let's see, we have someone popping in here. Okay, welcome. All right, so let's push forward. All right, so once you've created your budget, the key is to consistently reevaluate on a weekly and monthly basis, right? And the reason why I have this little sentence here is because I feel like from week to week, obviously your lives, right, it has its ebbs and flows, right? So the same things that you spent on last week are not going to be the same things that you spend on the following week, right? Necessarily, right? The goal is actually to stick within, right, a comfortable zone where things are consistent, but life happens, right? So that's why you kind of have to revisit your budget week to week, month to month, and then make sure that, okay, did I spend too much on entertainment this week, right? What best practices could I have, chosen in order to stick within a feasible realm where it makes sense going forward? Like this next graph here is like, it just shows you, let me take this camera off again. So this image here pretty much is like a good synopsis of like an average household, right? And it shows generally expenditures, like how Americans spend, right? Now, our own lives might be, not as active. For example, we may not have, may not smoke, right? We may not do some of these things, but certainly this gives you an understanding of where you fit into the grand scheme of things, right? So, like 12.4%, right? This household particularly spent on food, as you can, food is pretty a large spectrum for all of us, right? A lot of us who own homes, right? a big portion of our funds go to mortgages and things of that nature. So we want to be mindful. We want to be disciplined, undoubtedly. All right. So this is just a quick visual. Let's push forward. All right. So record your actual expenses, right? A lot of people I hear say, okay, let me, I think I spend, X amount on food or X amount on this or that. Let me put in my camera again. You can't assume, right? This is your money you're talking about. So, and I put this in here just based on, conversations I've had with people. And I feel like you have to be as accurate as possible, right? To record your actual expenses. All right. Organize your records, right? Records here just stands for, let's say you're not using an app, right? And you're using, regular receipts, right? Try to store your receipts in accordance with what they are. For example, categorize them, right? So you have your food receipts different from your usual day-to-day expenditure. For example, let's say, your hair products or, your body products and stuff like that. So you keep those receipts aside, separate from your entertainment receipts where, you go to the movies or, whatever people do these days, right? So you separate them, and that also helps your bookkeeper when it comes to tax time, but it also helps you in getting this sort of psychology right as it relates to organizing, being consistent, right? Organize the records. That's all I'm gonna say. Next one here I have is create a routine with your spending habits. So again, this presentation is for you as well as for me, right? Because this is an aspect where it's a work in progress, right? Creating a good routine in your spending habits, it lies with you, right? It lies with me, right? How close can I be? Okay, so I know I make $100, right, this week or whatever it is, right? And you know that that's your only source of income, right? And you know that, okay, no matter what happens, I have to show up to work and I get this $100. So with that $100, you don't want to, I'm using that as an example, obviously, but you don't want to spread yourself too thinly, right? You want to make sure, I'm just checking myself on time here. You want to make sure that, you're sticking close to that goal, which we talked about earlier, right? Moving forward. So incorporating category in your budget and labeling it unusual, right? So what does this mean? So a category unusual is not the same as your miscellaneous, let's say, right? Unusual is simply things that you spend on that you did not expect to spend on. For example, you went on a date and you decided to go to, I don't know, a circus, right? Or you decided to go pop in on a museum, something that you weren't planned for. So unusual in this case, in your budget category, simply means you didn't plan it, obviously. And then you document it there. And then the key thing is over time, you see, how much unusual habits do I actually have, right? Let's push forward. Next category I have is, point I have is comparison shopping. And my wife does this all the time. Like, she's the master of this stuff. So comparison shopping and always look for deals, right? So I'm not a comparison shopper. I try to be, but you go into a supermarket, you go into a clothing store, whatever it is, and, I just look at the first thing, I want to get, and I get it, right? If it's within my budget. But comparison shopping is where you really save, right? Because you go into the store and you know that, okay, I'm going in here because I need I don't know, some apples, right? So the key thing is they have different types of apples in different sections and whatnot. So you want to check the price tag to see, okay, this versus that. Now, some people might want to go completely organic, which is, you know, more power to you, because those are obviously top shelf stuff. But if you're a comparison shopper, you're looking for the best deals. You're looking for what's cheap, what makes sense, right? And that also, in the purposes of budgeting, it definitely helps you to save and cut back, right? So this obvious one, right? This is obvious to all of us. Use your credit card wisely, right? Um, this is the key thing, because a lot of times we go ahead and we use our credit cards and, you know, we use them nonchalantly, right? Oh, there's money on the card, let's swipe. But you're not being mindful of the fact that, you know, what are my interest rates, right? If it's a new card, what's the term that I have to use that card where I won't incur the highest interest, right, on repaying it? So we want to be mindful of that, especially with new cards. But generally speaking, with a credit card, you just have to be smart with it. If you have to have it, it's, if you ask me, it's best not to have a credit card, or if you do, only one for like emergencies and stuff like that, because, you know, that's a recipe for disaster, really. So next thing here, review budget and pinpoint small items that add up to large monthly or weekly expenses in this case, right? So you might, you know, buy some candy, right? You might be like a big candy person, and you keep buying bits and pieces of candy as you go along, and those small items add up, right? So you want to be mindful of that. So this is where probably one of the apps would work, the apps that are linked to your card. So then at the end of the month, you can definitely see, oh, you know. And by the way, guys, this is a quick note. If you have any questions at this point or any point, just pop it into the chat. And I think I have a question here already. Okay, cool. And I'll try to get back to you. All right. So that's for your financial planning. Let's pop over to savings. All right. Saving versus investing. Let me just check our time here. All right, cool. Yeah. So saving versus investing. I hope you guys like my images here. I really scoured the internet for these cool pictures here. But anyway, I like it. So, all right. So saving. So these are just some key. I don't want to say good or bad, you know, ideas behind saving, but, you know, take it for what it is. I just have a few listed out here. All right. So it's a good way to keep some liquid cash on hand, obviously, right? It's also a good place to start, but it's not the first step. It's only the first step, I should say, right? So you have cash, but what do you do with cash, right? You go to work and all that. You saved X amount, but then what do you do with it, right? Third point here is that it's a catalyst for missed financial opportunities, and that's, you know, that should be pretty, you know, explanatory sentence there, self-explanatory sentence. So those are just some key points that I have for saving. Whereas you have investing, right? It's the best way to get the highest return over time on your money, right? I mean, bar none, if you ask me. Unless you were born wealthy, or you suddenly come into a lot of wealth or riches. Besides that, it's investing that's going to get you there. All right. So I have, it's a method used to put your cash to work, obviously. It's the best way to protect your future self from inflation, right? This is one of the huge killers out here, inflation. From year to year, you buy something that costs, like I'm drinking this, bottle of water, and, I paid, let's say, $1 for this water, and next year it's $1.25, right? That's due to the great thing called inflation. So investing is sort of like a protection for your cash and yourself from inflation, because your money grows, right? It offers the opportunity to own shares in large companies, from Tesla to Apple. You can also, for example, earlier, if you recall, Orlando, maybe you, because you were here from the beginning, you recall, me talking about futures contracts and stuff like that. This is where your futures contracts would come into play, with like purchasing a futures contract on gold, grain, oil, and commodities like that, right? So, yeah, I mean, invest in a stock, invest in an Apple stock. I often tell some kids that I talk to, younger folks, 17, 16, I tell them, listen, if you have a Nike shoes, why don't you own some Nike stock, right? It doesn't cost, $100 at the moment. I believe Nike's around about 60s, 50s, 60s. The last time I checked, don't quote me on that. But, look around you, and chances are some product in your house, in your environment, is produced by a publicly traded company. If that's the case, look it up, right? And find an app. For example, you can use Robinhood. Robinhood is a good app. Betterment's a good app. Investment apps, right? Or you can just go to TD Ameritrade, open up a trading account there, right? With like $100 or whatever the amount is to use those platforms, and purchase some stock, and don't purchase this as if you want to sell it tomorrow, but you want to purchase it and hold on to it, right? When the stock goes down, you buy more. You don't sell because of fear. But that's for other sessions. Let's push forward. All right. Opportunities for saving, right? So obviously everyone knows about a regular savings account, right? You also have your money market account, right? You also have what's known as a certificate of deposit, or CD. You can also get that at your regular bank, right? And that's pretty much, without belaboring the point, the CD is pretty much you're loaning some money to the bank for a particular time period, right? That's how I can break that down. Money market is when you loan. Well, they're not like regular typical banks, but they're institutions that essentially take your money and invest it for you, right? With the promise that you get a slightly higher interest rate than you would with a typical savings account, right? Annuities also. Annuities are instruments that you would get through, obviously, an investment platform or your bank. And the cool thing with annuities is it's almost like you're paying yourself. So you contribute to this fund, this annuity, over time. And then when you get to like retirement age or whatever that time frame is, whether it's 20 years, whether it's 30 years, whatever annuity that you purchase, you can then get paid, right? So you sit at home and you get a check based on the funds that you contributed to this annuity to push forward. So opportunities for investing, right? Obviously, like we mentioned before, purchasing a stock, right? You can purchase an ETF, which I actually prefer ETFs, actually. Real estate and the bonds, right? Let's go back. So obviously I mentioned in passing, purchasing a stock. You look around your house and you see what you use, typically on a day-to-day basis, and you buy it, right? You buy a piece of it, I should say. But the key thing with like an ETF, right? An ETF is you're buying a basket, right, of a particular sector. So why is this important? So for example, let's say the big thing is like tech stocks, right? So with a tech ETF, which is, as you see, there's exchange traded funds, with like a basket of tech stock is you can get a piece of Facebook, Apple, I think Instagram just went public. No, Snapchat went public recently, right? You can get a piece of IBM, right? Sorry. Just got a notification here. Sorry. Okay. So again, so with the ETFs, right, it basically shows you that, hey, you can purchase for a smaller amount of money a basket that gives you several stock positions, right, at one price. You can purchase an ETF for, let's see, car companies, right? So you can have a piece of Ford. I used to own some Ford. You can have a piece of Ford, a piece of Tesla, right? A piece of, what else? Audi, right? All for one compact price. And to me, that's like a pretty cool thing. You can also own an ETF in a high dividend yielding stock, right? So obviously a dividend is the money you get paid once you own, right? Once you purchase a stock, then you can essentially get paid from that in the form of a dividend, right? Maybe big, maybe small. It all depends on how much stock you own or how many ETFs you own, right? Or better yet, what your position size is as it relates to your ETF, right? So to me, that's like pretty awesome thing created by this guy called Jack Bogle, like back in the 70s or 80s or whatever it is. It's like a amazingly cool instrument. And it goes a little bit further from just purchasing a single stock, which is, depending on the stock. For example, Amazon is like in the 600s right now, or $700 for one share, right? Whereas you bought like an ETF that Amazon is a part of, you'd be paying a fraction of that, So real estate. So real estate goes beyond saying, right? You can have your house, your actual home, right? Because that's like, you can leverage that, right? For example, you own a home and you want to borrow some money, which, I wouldn't recommend, but it is what it is. You can use your home as leverage to get a loan to invest in a business, right? You can own property, for example, to rent, right? A quick trivia question, well, not question, but a statement rather. But like, I was reading a book once. I think it was one of Tony Robbins' book, I believe, and it was talking about McDonald's, right? And the fact that McDonald's is not necessarily a food company, right? Really, McDonald's is a real estate company, right? Because from my understanding, all the properties that McDonald's have, all the McDonald's you see around, right, as a part of the franchise stipulation, they own the property where the McDonald's is. So you can purchase your franchise, you can run it, you can do all that good stuff. But the ground where the McDonald's is placed on is owned by McDonald's. I think they're like the second or the third largest real estate company. But this isn't publicized. But it's, as I understand it, a fact. So real estate, you can, it's an amazing tool. You can have a rental property, you can have a 2-family home, you rent out a room, whatever it is. And it never gets old. It never does. Anyway, so a bond, right? Bonds are, you're loaning, it's kind of like the CDs that we mentioned before. So with like a CD, you're loaning funds to the bank. But with a bond, you're loaning funds, your cash, to the government, right? So that goes without saying. Some people say that, some financial pundits, analysts, they say, well, bonds are somewhat secure because you know that it's backed by, an actual government, So supposedly the only way that you completely lose your money is if that country, I'm smirking a little bit, but because I think 2 years ago or so, like Greece had issues, Egypt had issues, So a lot of times you buy bonds. It doesn't necessarily have to be U.S. bonds. It could be bonds from whatever country you choose, but do your research, obviously. Um, but the point I'm making here is you can, purchase bonds, but they may not be as secure as you would imagine, So, but it's a good vehicle. So again, savings opportunities, opening up a regular savings account, opening up a money market account, right? Purchasing a CD, right? And CDs are time stipulated. So you can purchase a CD for, I believe, 6 months, a year, 3 years and beyond, I believe, depending on the institution that you're looking into. But it's a good way to make an extra interest on your money if you choose to go the saving route, right? It's much better than, getting your, what is it, 0.02% from your regular savings account, right? Believe it or not, we're actually running out of time. I want to open it up to any sort of conversation, any thoughts you guys might have about this. Oh yeah, there's one more. There's one more. Currency exchange, right? How could I forget? Again, I mentioned this earlier. It's just pretty much investing in money. So you use money to invest in money. But this is more of a trader's vehicle, not so much for a novice investor. Novice investors can get into the trade as well, but it's much more difficult. That's just my timer saying I'm running out of time. So again, this has been the first installment, right? We actually went 40 minutes instead of 60, but that's okay. This has been our first installment of my financial webinars. And again, the nature of it is simply just to spark some interest, to start a conversation, and then to take some information that I've learned and I've been learning and try to impart it to whoever wants to be a part of it, whoever wants to listen. Let's see if I have any questions here. Okay, no questions, nothing in the chat. Cool. So if you have any thoughts on possible topics that you want me to go ahead and research and bring it to you guys, be sure to shoot me an email. You can see my email down here, reginald@adina.media. Don't be bashful. And again, thank you so much for joining me. And this has been quick. Send any comments you have. Let me know. I welcome your critique. And thanks for joining me. Peace and salutations.